Okay.
So
Hello, can everyone hear me well? Let's wait for a few minutes before we get started. And everyone should be able to hear me. Can everyone hear me? Perfect. Okay. So let's wait for a few more minutes and then let's get started. A shout out to Zahara, to Nuruddin, to Fakshat, to Hasnain. Thank you for joining us, joining me on this presentation, this webinar on buying below market. I hope to provide certain things of, knowledge of value. And I hope you enjoy this webinar and learn something from it. Be waiting for a little bit. Um, Another question. Everyone can see the screen right now, my screen. Perfect. Okay. So welcome to the webinar on buying below market, instant equity by purchasing property below market value. Before we go into the details on how to go about buying below market, let's discuss a little bit about me, the presenter. I am an investor. I've been an investor for about 20 years now, and this is the best uh, line to be in terms of passive growth, and appreciation. Um, One of the easiest lower risk methods to build wealth is investment in real estate, if done safely, and that's what I'd hope to to share my knowledge and my insights. Um, I am a realtor. I work with Coldwell Banker, and the idea of this webinar is to give you to have an honest discussion on how to buy, below market properties, and see whether I am the right real estate agent for you to help you procure those properties. In case I am, I'd love to be able to work with you. If not, fair enough. You could use my ideas and procure the properties on your own. Um, that is something which you could which you could do. Um, but if you decide to use my services, I'd be available and be willing. And one thing about me is uh, in most of the projects which are properties which I get to you, I like to have skin in the game. So um, if I get you a pre-construction project, most likely I have um, invested in it into it myself. If I get you a fixer upper, then perhaps I am willing to put my own money and be a joint venture partner with you. So that's the difference between me and most other agents, perhaps. I'd like to put my own money and my own skin in the game, so that you know that you're not left alone high and dry, and it's not just um, a transaction for me. It is uh, investing also. We're going to be looking at uh, the following basically. Today we'll be looking at what our webinar audience is made up of, understanding who we are and our fellow participants. Um, then we'll be looking at below market properties and what are they, why, risks involved, and sprinkle it with anecdotes of what has happened in certain instances when I've done it myself or done it for a few of my clients. Some stories so that you can learn, and you'd have a better understanding of what different um, below market property strategies are about. Um, then we'll be looking at the process on how to acquire the below market properties. And then, of course, we'd have an interactive question and answer session so that you can get the most out of it. In real estate, money is made on the purchase, not on the sale. This is perhaps the most important statement. If you have to learn anything in real estate, this is it. That it's very seldom that you can sell above the market value. The reason is that there are um, even if you manage to sell up, significantly over the market value, the financing may not go through, and and perhaps the deal may not go through. So it is very important that you make your money at the purchase and not try to make your money on the sale. The idea is to buy below market and sell it in the open free market. So let's look at the participants which we have today. Um, Before you logged in out here, I sent you uh, a registration link, and I asked you the following questions. Um, I asked you, are you a realtor or are you working with one? And majority of the people, about 76%, are not working with one, but there are quite a few people who are real estate agents amongst us, and y'all are welcome on board. I try and get the best deals for my clients. So in case you have any fantastic deal and uh, you want quick closing where it needs to be a fantastic deal for my clients, I can make that happen. And even if you're working with another realtor, you can use the knowledge which I have. I might not be able to help you directly, but you could contact your real estate agent to give me a call, and perhaps I can help you through them. I surprisingly have a lot of real estate agents who are my clients also. I help them buy, properties because sometimes they don't have access to platinum, uh, um, you know, uh, events by builders, so I could help them get access to. Or sometimes I just have assignment deals which are, of course, not available on MLS. So I do have a few real estate agents who are my clients. Is my screen still frozen? Kevin says that my screen is frozen. Is it still frozen? All right. Okay. So I also asked the participants whether they have any real estate experience, and vast majority of them, so about two-thirds of them have no experience, or they don't have any experience except owning their own home. Now, why I mention this is because I'm not going to go very technical in this webinar. I will give you a call individually to discuss your needs, if you allow me to do that. And we could go technical for people who have more experience. I have decided to keep the webinar a little bit more broad so that you understand the big picture strategies. And if you want to discuss the details or individual projects, then of course we will do that on a one-on-one basis. So people asked, I asked the participants, what are they interested in? Majority are interested in bank sale foreclosure properties. That's basically power of sale properties, pre-construction sales, followed by assignment sales, then divorce listings, uh, tax sales, and fixer-uppers. So I'll decide to give more time um, to topics which most people are interested in. So understanding below market properties. What, why, risks of below market properties. Now, what is a BMP? Basically, below market properties are properties, they're residential properties which you can purchase at below their actual market value, such that after an investor purchases the same and sells it in a free and open market, the transaction would yield in profits even after accounting for transactional and selling costs. So, what do I mean by that? It means that typically you're looking to buy at least at 10% less than expected market value, so that you can account for a 4 to 7% transactional, like lawyer fees, land transfer costs, real estate agent fees, so on and so forth. So 4 to 7% are typically the friction for every property. And if you can get something at a discount of more than the your estimated transactional value, or transactional cost, that is what a below market property would be. Now, I get asked a lot of why would a seller sell at below market value? The answer is that a seller will not sell or get, it's not possible to buy a property below market value if it is on a free market deal. So when I say free market, I mean that if it is listed on MLS, it is virtually impossible for us to get it below market. What you are then doing is that the investor is buying their problem at a price which the seller is unwilling or unable to solve it at. So things like fixer uppers. Um, if a property exists, I'm talking about on MLS. So it is on a free market, and a property exists, and it is at a discount. It is at a discount so that um, the the seller is unable or unwilling to repair it, get it up to speed, and put it up on the market. And that is the reason why you are technically buying their problem, so and hoping to solve it at a lesser price. And that's a successful strategy. A lot of my clients do that. They buy about 2 or 3 properties a year, flip it and repair it, flip it and sell it. That's something which they do. Or you would buy this property which is not on of the free market. Now, again, what the free market is listed on MLS. Most of the properties which will be below market value properties will not be listed on MLS. And let's look at the different kinds of properties. So the first property which I'll be talking about, first method of purchase, would be looking at power of sale, that's bank sale properties, and foreclosure. Now, what is the difference between power of sale and foreclosure? In the power of sale, the lender sells the property, and in foreclosure, the lender takes title on the property. In the power of sale, the former homeowner gets the excess of property of the profits from the sale, subject to any transactional costs or the fees which the bank would actually end up charging. In terms of um, foreclosed properties, the homeowner gets nothing, and generally it is a uh, longer process to create a foreclosure than to look at power of sale. So let's say if I am the bank or I am a mortgagor, it is easier. It takes about 6 months to do the power of sale, while as foreclosure it takes about 1 year. So what are the risks involved in a power of sale? The risks involved in power of sale is that you do not know what the property has technically been used for, because now the seller is the bank. So let us imagine that there was a grow up, or there was the property was used for illegal purposes. If the seller does not know about it, there's no way for us to find out, because now the seller is the bank. Also, when the banks use power of sale, they have their own clauses, and they, if you can imagine, everything is towards protecting the bank. It is not geared towards protecting you as the investor or the buyer. And practically, they are not allowed to sell the property at a significant loss. The court's not going to allow them to do that. They tend to sell it at close to market value. Yes, maybe $5,000, $10,000 less, but far less than the 5 to 10% discount which we need for us to have a good deal. So what are the opportunities? Now, if a power of sale reaches MLS, it is actually too late already. If you want, I can send you a list of power of sales or bank sale properties which have already reached the MLS. We can go and we can have a look at those properties, and we can put in an offer to buy. But in terms of value, you're not going to get a lot. It'll be similar to buy a fixer upper. The money is technically made when you reach out to struggling homeowners before the power of sale. So if you remember, it takes up to about 6 months for a power of sale to actually happen. Before that, the homeowners try their very best to get out of the situation. And one way they do it is by reaching out to their mortgage agent. And I have connections with mortgage agents who do high risk lending, and these are the folks who come to me and tell me that, you know what, I have a seller who can't keep up. I have a person who cannot keep up with their mortgage payments. See whether we can help them and in selling the property. So this is the way in which we can actually sell the property or reach out to the sellers before it is too late for them, and before all our potential profits are eaten away by the bank costs. Another thing which I do is I run advertisement campaigns targeting them. So on Facebook or even otherwise, I have campaigns which go on, which state that, if you cannot pay your mortgages, I can help. I can buy the house as is, where is, and I get a lot of interested potential sellers reaching out to me, and we create a win-win situation for them. Now let's look at, does anybody have any questions regarding power of sale properties? Any questions at all? Okay, so what we do is we ask the questions at the end. Just make a note of them so that I can ask, I can address all the questions at the end of the presentation, if that is okay with everyone. Sure. So now let's look at pre-construction sales. So a few questions are coming up. Lien on properties we are not aware of, and would inspection condition be allowed, so on and so forth, right? Let me address that during our question and answer session. But quickly, yes, in power of sale, I get my inspection done before I put in the offer. So the the offer is not subject to inspection. The offer will be a firm offer, though you could put in whatever offer you want, but it's just that the bank will not accept that because you are going to be using their schedules, and one of the clauses in their schedules will write off any inspection clause which you have. But if you visit the property, you could have a home inspector come in before you put in an offer. So that's something which is possible. And if you use my advice and reach out to homeowners before the power of sale actually happens, then of course we could have it subject to home inspection so that we have more peace of mind. So uh, what are pre-construction let me yeah, pre-construction sales. Pre-construction sales are, remember when I said that you cannot buy below market properties at a free and open market. So you can buy it when it is off market. Whenever it's off market, would mean off MLS. So pre-construction sales are one of the biggest chunk of non-MLS sales which happen. Now, why is this such a lucrative place for us to be? Most builders, they like to sell 65% uh, of the project um, before they spend any substantial amount on the project, and they like to spend or sell about 80% before financing or construction finance is obtained. So there are important numbers: 65% and 80%. That is why when you have a platinum or VIP events, uh, you receive the property at what would be a discount. There is no guarantees that that is at a discount, but generally that's what builders do. That they create a price because it is not that they're discovering a price. In on a free market, you discover a price, so the market dictates what the price will be. Here, the builders want to create a price. And once you create a price, you need to have a lot of people at um,
who would transact at or above a particular price, and then that becomes the market base, and the builders want to um, you know sell more, the remaining 35 to or 20% of the inventory at a much higher price once the base price has been established. So this is a very good way of us getting a substantial discount on the on pre-construction. What I personally like to do is I like to go to the builders. I like to tell them that, look here, I have 15, 20 buyers who are interested in this kind of project, in this kind of value, and their financing is in place, and and sell it to me um, at a discounted price compared to what it would be if you would sell it after it is launched, or something like that. So sometimes I'm able to procure maybe 15 to 20 units at a discounted price, and I offer that to my clients. um, One thing about pre-construction sales is that by law, in condominium resale, they have to give you a 10-day cooling off period. Now, most of the pre-construction sales are oversubscribed 6 to 10 times. So that means for every property that a builder wants to sell at a platinum level, they actually have 6 to 10 worksheets. So it is very important for us to have everything in place, uh, so that our when we send in our worksheet, uh, you know, we are not rejected because we don't have financing in place, or we are not flexible in terms of the units which we want. Generally, this is how I like to do pre-construction is, after having a discussion with you, I want you to give me um, a blanket, um, a purchase. That means that buy a property between 500 and $700,000 with this kind of a view, or this kind of a layout with this kind of a builder. So as soon as the project comes out, I like to submit my paperwork within a few minutes of that, and that way we get the best allocation. And then, uh, of course, we've not got a time to do a due diligence in that time. So I use the 10-day cooling off period to do that. So for most of the properties, I like to do my due diligence before. Here, I like to do my due diligence during the 10-day cooling off period to find out whether it is indeed a good deal or not. Then we have uh, one thing you need to be aware of when we're looking at pre-construction sales is interim occupancy versus closing. Now, interim occupancy is when you get the keys to the condominium, and closing is when you transfer when the builder transfers the title and ownership. Now, why is this done? Because when a building is built, there are multiple units, and um, they get an occupancy certificate, as soon as a unit is made ready. But they do not go to the land, to transfer the title and break the condominium into individual titles till nearly the entire building is ready. So generally there is a time of 1 month to about even 6 months between interim occupancy and closing. The lower your floor, the higher the period of interim occupancy which will be uh, applicable, because Generally, the builders would make the lower floors faster, and then once they make the lower floors, they'll go up higher. Now, as a part of pre-construction, you need to be aware of development fees and levies on your investment. Now, what are development fees? This typically ranges from five to $20,000, depending on what you actually buy. But when there's a new project which actually happens, the government now needs to provide additional resources to that community. And the government is going to charge the builder for those resources, which now the government will need to provide, like fire, like schooling, like roads, and so on and so forth. So this is passed on from the builder to the buyer, and these fees can be capped. If you fail to cap it, then you are on a hook for unlimited amount of closing costs. So whenever you do a pre-construction sale, this is one of your most important aspects. You have to cap your development fees and levies. Now, as an investor, you would be paying HST on the condo, and you could get most of your HST back if you provide uh, proof that you have a tenant living in for at least 1 year. So, so if you buy a pre-construction condo and live in it yourself, the price includes the HST. But in case you do not want to live in it yourself and you are an investor, then you would have to pay HST on that, and then you can apply to get your refund once you have a tenant for that. Now, this is so that we don't have ghost buildings. Like there are certain countries, or places in the world, like for example, Dubai, wherein something like that does not happen. So you could have the entire building ready, and there's nobody living in that building. Out here, the government does not want that. They want, if a building is ready, either you live in it yourself, or you get somebody else to live in, or then you pay HST on it, which you wouldn't get back. Now, assignment sales on a pre-construction condo is selling your pre-construction uh, condo before closing. So this can be done anytime from the time you sign up to buy the property, right up till closing. But generally, there are certain stipulations which are put forth by the builder, such as you cannot put it up on MLS, such as you cannot sell it if they still have similar units such as yours in inventory. So uh, assignment sales tend to happen more or less when you get the interim occupancy. That's when most of the assignment sales happen. Am I doing all right in terms of explanation? Any questions regarding out here? You want me to go? Good. All right. So now let's look at another method of uh, purchasing below market properties. That is assignment sales. Now, just recently, I had a client, or well, she was not my client. She gone ahead and bought a condo, and did not have money to uh, for the final a final deposit and wanted a way out of it. Now, she had bought the condo for $400,000. Right now, it was worth about $550,000. And the point is that she was willing to sell it at a substantial discount because the amount of money she had paid was about 10%. So she paid only $40,000, but um, the the market value of the condo had substantially increased. She wouldn't be able to close the deal, and I was able to help her uh, make sure that her property is not does not get wasted, because in case she was not able to come up with the deposit or sell it on an assignment, she would lose the entire deposit she would have paid and still be responsible for further damages. So this is an excellent method for us to procure uh, uh, properties at a discount. But let's look at what assignment sales are. An assignment is when an assigner sells their interest in a property before they take possession. In other words, they sell the contract they have with the builder or the original seller. See, a lot of people think that only builders have, or pre-construction properties are what are assignable, but that is not true. Even resale properties, nearly each and every contract on an resale property is assignable. So there have been cases when a buyer wants to purchase a property, and circumstances change, and or the market increases drastically, and the a buyer wants to make does not want to close the property. So even in those cases, we can procure the property on assignment. Another way in which you can procure the property on assignment is when I have my rent to own clients who uh, who've bought the property on rent to own, but now it's the time to close, and they're unable to get their financing in place. So they can assign their interest in that property. So we can have assignments in pre-construction, we can have rent to own assignments, we can have resale assignments. Uh, it is pretty vast. Generally speaking, most builders prohibit the listing of assignment on MLS. So now this again gets me to my point on how can we buy below market, because we are buying off market properties and they're not on MLS. And because they're not on MLS, we are not going to give them the full market value of the property. And this by far is one of the best opportunities, apart from pre-construction, to purchase properties with at a discount or little risk. Okay, so there are two questions which we will be looking at in uh, uh, during the question answer session, but I'll just read them out so that we are aware. Um, Zahid wanted to clarify two things. If they already have a home, I buy a pre-construction condo for investment only. Can I sell it on possession day? I'm aware of capital gains tax, but to avoid that, do I need to stay in that investment property for 1 year? Also, please advise details on risks in foreclosure. And then in what circumstances do we get assignment sales in pre-construction discount? So we'll be discussing all of those in the question answer session. Let's continue. Now, what are tax sale properties? So a tax sale is a sale by the municipality to recover unpaid property taxes on the property. By the time a property is eligible uh, for tax sale, um, the the property taxes are at least in the third year of arrears. So basically, this is the government trying to recover its dues, and now because it is the government involved, there's no obligation to sell it at a fair market value. They have something called as a minimum tender amount or a minimum bid amount. That means that even if the property is worth $1 million, I've seen the minimum tender amount as little as $35,000. So that's the amount of money which the property is owing the municipality in terms of property taxes. Um, and we can procure this at a substantial discount if we have the right tax sale strategy. Now, when you actually purchase a property on through tax sale, the there are no mortgages. So if there are any mortgages, except that is for from the Crown, which is basically the government of Ontario or government of Canada, except those liens on the property, it is free and clear. So technically, it is possible for you to buy $1 million property for just $35,000. Now, you know, a few stories. Um, Most of the different municipalities have different ways of conducting tax sale. Most of it is done through a tender, and when you put in your tender, you need to have a bank draft attached with it. Most of the municipalities have at least 20% of your purchase price. So let us say that a property is valued by your estimates at $500,000. You would require to put in a deposit of 20 or percent, which is $100,000 at the time of putting it a tender, so that you'd have a chance of getting the property. And I attended before the pandemic. I used to attend, the tax sale properties, and a recent tax sale in Mississauga, there were 45 bids on one condo in Square One. So can you imagine the amount of money which was blocked just so that people have a chance to bid on the properties? Another thing is that in these tax sale properties, you cannot visit the properties. You don't get access to it. There are no showings. If there are people living in the property, that is your headache. You basically cannot do anything about the property. You can maybe just visit it from the outside, have a look at it, but you cannot do anything apart from that. Now let's look at again. Let me read out the question answer so that I'm aware. Okay, where do we find these properties for tax sales? I can send you all the link if that is something which you are interested in. And how do you get someone out of tax sale? So again, for a tax sale, they have right up till the time of that the tender is open, that if they pay their dues to the municipality, their auction is actually cancelled. And this is what happens with 80 to 90% of all tax sales, that you'd go with high hopes to put in a bid on a particular property, and they tend to be cancelled because the homeowners have found a way to come up with the money to pay the municipality. Now, let's look at divorce listings. Now, this is another method which I'm personally discovering, which is pretty lucrative. I was not aware of this myself quite a few years ago, um, and now I'm seeing this even, uh, people reach up to me, and when they're separating, um, most of the times they need to liquidate their asset, because it is very difficult for one of the husband or wife to buy off the share at the other um, uh, you know uh, the other party. So they want a quick resolution, and they don't want the headache of going on MLS. They just want to get over with it. And this can give us good opportunity if you want to, uh, perhaps help the couple out, give them a decent offer so that it's clean, and they can go ahead and start their new life. Now, one thing which I've also noticed is that when I've helped clients with their matrimonial home, uh, one of the partners, they tend to have other investment properties. So it just opens uh, uh, up more than one properties, in case you are able to help someone or reach out to someone um, who's separating from their significant other. So one of the good ways of getting this is, you befriend a divorce lawyer, and let them know that you are available for a quick close, in case there are um, any issues between partners and they want a quick resolution. We can I do have people who'd reach out to me and say that, okay, this couple has issues, see whether we could help them sell the home in a quick fashion. And that's what you could perhaps help the couple out that way. Or there are other ways. Again, Facebook is a very important. Somehow, Facebook and Google know more about. It is very intrusive, but they kind of know whether there is separation talks and things like that happening, and you can target them, and that's another good source of getting divorce listings. Are there undervalued real estate sales? Yes. So that's what this presentation is all about, is how to find below market property. So, and yes, that there are substantial amount because they are off market. So now let's look at the last uh, type of below market properties, are fixer uppers. So in real estate, a fixer-upper is a property that will require repair, though it can be lived in or used in as is. They are popular with buyers who wish to raise the property's potential value to get return on their investment, or as a starter home for buyers on a budget. Now, since not all fixer-uppers have to be fixed and be flipped, you could use a buy and hold strategy on fixer-uppers. That means buy a rundown home, have very minimal repairs on that, get a tenant, and once the tenant leaves, you could repair it and then sell it at a substantial profit, because now you've not only got it at a discount, you also have the value of holding on the property and the market growth. So Yakuta has raised her hand. Any question, Yakuta? All right, I'll continue. If Yakuta has any questions, she'll. Okay, so no questions. But if you are planning to flip a fixer upper, I would advise you to do this only if you are handy or have your team ready. Now, if you want to go in thinking that you'd get a contractor and be able to do that, my own personal advice is that um, it is the most difficult thing to get good contractors in Toronto. They tell you one thing, and uh, they tell you 1 month, and it'll take them 4 to 6 months to do that. So you need to be handy yourself and be prepared and able to do it yourself, or have a team ready, which are like on your payroll, so that you can go organize, get it done, and be aware of holding costs, because generally you can't rent out the property while you are repairing it. So from your purchase to closing, including repairs and everything, it takes anywhere from 6 to 12 months. So you need to be aware of the holding costs also for a fixer uppers. So what is the process? Now, I've had a lot of people ask, like Shiraz also was asked me, are there any undervalued real estate sales? So what is the process of getting below market properties? Okay. And Fakshad's question is, which type of these sale options is the most profitable? I will answer that in the question and answer section. So let's hold on. So now, what is the process? The process is understand the kind of properties you are interested in, type, location, price, risk reward profile. You need to understand, and that kind of answers Fakshad's question. What is your risk reward profile? Are you a handy person? Do you have a team in place? Are you able to um, uh, participate in tax sale properties, that you do not, you're not disappointed if the auction or the tender gets cancelled, and you're blocking your money for um, you know for some time while you undertake this bidding process. So for that, I would have to have an individual discussion with you, or if you're working with a real estate agent yourself, then have the discussion with that person and see whether what kind of your risk reward profile suits you best. Then this is perhaps the most important step, is get demonstrable finances in check, down payment, mortgage, and pre-approval. Now, uh, I have had so many below market value properties, and then when I send it out to my client list, I get 20, 30 people who are interested uh, in a particular project or a particular property. Sometimes there's just one property. So I need to ascertain that you have the finances in check. And also, if you are taking part in pre-construction properties, you need to exhibit along with your worksheet that you have your financing in check. That gives you the most favorable outcome, when you're looking at pre-construction. So even even if you think you have your finances in check, or you have a line of credit, or whatever, you need to get it in a demonstrable fashion, so that you are ready, and you are ready to pull the trigger as and when that comes. Yes, a substantial amount of money can be made in below market value properties, but you need to be ready to act on it, and show that you have the finances to back it up for you to partake in it. And then you can either do this yourself. You can create a marketing campaign to attract the sellers, or then hire me or another agent, to help you procure these properties which are below market, and then we can work together. So this would mean that we'd have to sign a agency wherein I would be your agent to help you purchase a property, and using that is what I you know I market. I When I market my attract assignment sales, I say that I have people who have the financials in check and can close within a week. uh, I let people know, and that's how I'm able to get the best deals. Similarly um, with pre-construction properties, you need to be able to uh, show show the builder that you actually have the kind of clients who are backing you, not that, okay, give it to me and then I'll send you the worksheets. It doesn't work that way. So in case you are interested in buying below market, you would need to be comfortable with really quick decisions, like give a call, within 1 hour a decision is made. So questions now. Let's open it up for questions. All right. So uh, Greg's asked, which options do not require mortgage pre-approval for? A tax sale you would not require mortgage pre-approval for, because you'd be paying 20%, not paying, you'd be paying 100% of your tender amount, but you would uh, along with your offer, you'd be sending in at least 20% of your tender amount. For everything else, you need to have your finances in place, so that uh, you know quick decisions can be made. And technically, you do not need your mortgage pre-approval for anything, but practically you won't get any properties if you don't show or demonstrate that. Let's look at other questions. So now let's look at all the questions. Let's look at it from Zahid. I want to clarify two things. I already have a home. If I buy a pre-construction condo for home for investment only, can I sell it on possession day? Um, okay, so I'm not going to be talking about the capital gains tax, but you do not need to sell. Uh, okay, you cannot sell the property on possession day if it is not an assignment sale. You can sell it on possession day if it is an assignment sale, but you can sell it on close. Remember, in condos you have two closings. One is the interim occupancy closing. If you want to sell it at that time, it would have to be on an assignment sale. If the title gets transferred onto your name, you do not need to stay in the investment property. You would lose your HST. That's it, but you can sell it the same day. Um, Now, let's look at the risks in foreclosures. Now, in my experience, I haven't seen foreclosed properties. I've seen a lot of power of sale properties. Foreclosure is when the title gets transferred on to the lender's name, and that is a huge process and it takes a year or upward. The bank is interested in getting their money back, and the best way to do that is through power of sale. And the risk is that if you go through a power of sale with the bank, they have like an insane amount of pages and clauses which protect their interest, and they will not accept any offer without those clauses. So basically, there is a substantial amount of risk, and the discount which you get is not significant because you get it between maybe 15, 20,000, maybe $25,000 lower, but which is not the 7 to 10% which I see when I'm getting into uh, below market properties. Then in what circumstances do we get assignment sale in construction and a discount? So generally when this is perhaps the best time wherein property prices have increased significantly, but because of the pandemic, job situations have changed, income situations have changed, businesses have taken a beating, so they do not have the capacity to close on the property. So that's when you get the best discount because they want to get out of the deal. How do you get someone out of tax sale? You buy their property or help them come up with the money which they owe to the municipality. The point is that um, it's difficult to approach the sellers once the property is already on a tax sale. If there are people who are struggling, uh, you know, to pay their property taxes or their mortgages, that's when the most amount of money can actually be made. Post-COVID, how's the condo market in um, uh, Toronto versus the suburbs? Now, this is away from the topic of today, but I'll just handle it uh, just because condos in Toronto have always been a speculative play. They have not been a buy and hold because um, uh, they do not cash flow well. Um, right now, uh, Toronto is seeing not a drop, but it is not seeing a great growth in property prices, and there's a lot more inventory, and the rental rates, rental prices are significantly lower. So, uh, it might be a good time for us to buy Toronto property with the hope that it changes when we reach post-COVID. But then again, that was a speculative play. It is not um, it is not one of the strategies which I like because I am very risk averse. I like to know that I can hold on to my property without uh, you know and not bleed on my property every month. HST rebates, can I prove rental to avoid the tax payment, or do I have to pay HST? No, you have to pay HST and then apply for your HST rebate. You can't um, prove that you have a tenant and then or you just say that you're moving in yourself, or uh, you know uh, a family member is moving in. And please, if you say that you're going to do that, please actually move in yourself or have the family member move in because the CRA is very diligent about this. They audit if you move in and if you sell the property within 6 months or whatever, they're going to audit it and they're going to see whether any HST fraud happened or not. So thanks, Danny. Are there undervalued real estate sales? Yes, that's what we've discussed. Does it make sense to incorporate? That's a tax related question. I would incorporate if you are going to do this as your business. If you're going to uh, do this, buy more than one property every year. If you're going to buy one property every 4 5 years, I don't know whether you would incorporate. But again, this is me talking from just my experience, not from a professional point of view, because I'm not a professional, when it comes to taxes and things like that. More questions. Let's look at that. Okay. How much is the okay? What is the most profitable option on an average? Pre-construction. If you have a longer term horizon, you know you buy pre-construction and then forget it for 2 to 3 years till you to get occupancy, or assignment sales if you're looking at immediate gratification, or tax sales, but it is a lot more of a headache to do the tax sales. Um, Fahad is asking me how much of your RRSP funds you can use as a first-time home buyer for pre-construction. That you'll be using your RRSP funds at the time of closing. You will not be using your RRSP funds. You would be borrowing against your RRSP. So that's what it would be. Um, then uh, which type of options is the most profitable? I've answered that. Okay, where do we find uh, where do you find tax sale properties? I can send you the link, Ontario tax sales. That's what I use to find it, which kind of consolidates all the municipalities, but it is free information which is available on different municipalities' websites. So you can go to Peel region for Peel tax sales. You can go to Halton for Halton region tax sales, Durham for Durham, so on and so forth. So each municipality will have their own tax sales. Do I have any options for immediate buying or investment, which is good deal in the seller's market? So once you have your, we can have a one-on-one discussion on that. And uh, the point is that most of the deals, they last for less than 1 day. If they last for more than a day, then they're not good deals. So you need to have everything in place and ask me to go around getting those deals. And for that, we need to sign a representation agreement and me create a campaign for you so that I can find those deals. What are the costs which you pay during the interim occupancy? You technically pay a phantom rent, which is assuming that because you're not paying a mortgage, you're paying interest on the 80% of the money uh, which you've not paid the builder because it has not yet closed, and then you are paying for estimated
condo fees and municipality taxes. That's what you'd be paying during. So it is called as phantom rent or rent to the builders, though it is because you're not paying a mortgage at that time. So I guess I have handled all the questions. Uh, have I set up an investment club? This is similar to an investment club, which I plan to do. The thing is that as a real estate agent, I cannot charge money to be part of a investment club. So uh, one way around that is that if I have a buyer representation agreement, then we can all be as a part of that club, and we can share our deals and so on and so forth. Because some of these properties which I can get to you, there might not be a commission which the seller is actually providing. So that is why we need to have that representation agreement, so that we know uh, you know how I, I would be remunerated. In case you do not want to have an exclusive buyer representation agreement, we could have a system wherein you pay a fee so that I can market and get those properties for you, so that you wouldn't have to pay a percentage. So we will look at that when we talk one on one. So thank you guys. I guess there are no more questions, and it's about 11 minutes past my estimated time. But I really hope you'll enjoy and let me know. Thank you. Thank you, everybody. I'll be logging off now, and I will, inshallah, I'll give you all a call individually to thank you and ask if this is something which you may want to do with me.